Hello, everybody, and welcome into Commodity Culture, where we break down commodities markets, sound money principles, and geopolitics, all with the goal of making you a better investor in the commodities sector. My name is Jesse Day. Today is March 25th, 2026, and I'm thrilled to welcome Eric Yeung to the show, who goes by King Kong 98 on X, where he discusses geopolitical and economic effects on precious metals and commodities. Gold and especially silver have been taking a major hit as the war in Iran continues to escalate. With the US looking like it's on the verge of putting boots on the ground in the region, how will the metals react? Eric provides perhaps one of the best explanations on how this war and precious metals markets are intertwined, and the signs to look for before you choose to buy or sell both bullion and mining stocks. Eric also believes that Iran accepting renminbi for oil is a far bigger development than most realize, and why it could spell the beginning of the end for the petrodollar system. All of this and so much more ahead in my conversation with Eric Yeung. Eric Yeung, it is great to have you back on Commodity Culture. Now, the war in Iran continues to escalate, with Israel continuing to launch strikes on Iran, Trump threatening to attack energy infrastructure, Iran returning Israel's fire in kind, and just in general, a lot of chaos all across the region. Amidst all of this, the Strait of Hormuz remains closed to most ships that want to pass through. You wrote an article on your Substack recently about the implications of the Hormuz closure for the silver market. Could you break that down for us?
Oh yeah, that was a while back that I wrote that, Jesse. Basically, the gist of it is that a lot of the of secondary and third order minerals that are produced around the world, right, are dependent on the byproducts of crude oil that is coming out from the Strait of Hormuz. Mainly, sulfuric acid, basically, that's what it is, right? Because the oil coming from the Middle East is sulfur heavy. So that's basically what it is. Um, and as we know, the oil coming out from the Strait right now is heavily obstructed because Iran has control of it. I mean, like oil is coming out, it's not zero. Apparently, countries are paying Iran a 2 million US dollar equivalent toll fee to get the tankers out of the Strait of Hormuz. So they actually, according to the Iranians, all proceeds are supposed to be in RMB, yeah, if you believe that. I mean, I believe it because that's what they say. But in reality, it can be multi-currency, who knows, right? Um, and then Saudi Arabia, Qatar, etc., they also have pipelines going to the Red Sea. So apparently 30% of their oil is getting out of the Middle East that way. So why am I saying all this? Is because it's not zero. So yes, there's a major hit on sulfuric acid output, but is it zero? Probably not. Is it going to crash? In my article, I said if it if it's really bad and the global sulfuric acid output crashes, then there might be like a slump in silver demand as well. Because if you don't have the copper, you don't need the silver. You need both copper and silver to build solar panels, things like that, right? So we're in a situation where, let's say, if there's a decline, but not a complete stoppage, like the reverse might happen. Like silver may actually rebound a lot faster than we, envisioned originally. Because silver, I don't know if you are aware, but like for the longest time, I've been telling people silver is the new oil because silver drives the renewable energy push by countries like China, and even supposedly Cuba is going electric because the U.S. is embargoing Cuba. They like the U.S. Navy is blockading Cuba, so they can't get sufficient crude oil or like sorry refined oil, right? Refined fuel, but whatever silver that they got in the past, or like the Chinese manufactured solar panels, that's ongoing, basically energy that is being supplied to their power grid.
Yeah, those are some very interesting thoughts. I want to move over to gold as well because both gold and silver have taken quite a hit as this war rages. Do you see this as just a sell everything moment and scramble for liquidity? Are other factors at play? I'm speaking about gold specifically here. And do you expect gold prices to react? How do you expect gold prices to react if the war drags on for longer than many anticipate?
So I have a chart on my X account. So like it basically points out the peak of gold price back at the end of January, and then we had another peak at the end of February. Okay, so basically what I think happened is for the last 2 years, and especially January of this year, I think the GCC countries, especially Saudi Arabia, because that's the information I got, has been selling a lot of their oil in RMB yen to China. So that's significant because, as we know, the petrodollar depends on all these GCC countries and Saudi Arabia selling the oil in US dollars, right? So like they sell in US dollars, they have US dollar surplus, and then they recycle that US dollar surplus into US Treasury bonds, bills, and notes. And that's how the US government, number one, supports the US dollar, and number two, support the US Treasury market. That's the petrodollar system. So if China is able to buy a lot of its oil, the information I got is Saudi Arabia started in January 2026, agreed to settle 50% of the oil that it sells to China in RMB yen. So if that's like that happened, let's say like they ramped it up to 50% by January 2026, that's a significant challenge to the petrodollar system. So what we saw might be a combination of things this year. That all the insiders in the U.S. in Washington D.C. knew that this de-dollarization by China is accelerating in the Middle East. And of course, I wrote an article about Iranian oil being sold to China 100% in RMB. So anyway, like I digress back to what I just said. So these insiders knew, and they probably knew that Israel and the military-industrial complex faction within the U.S. really wanted this war to happen to, number one, achieve Israel's ambitions in the Middle East, and number two, to stop China from using RMB yen. Like, I mean, at least stop that process being expanded to buy Middle Eastern oil. So I think somebody knew the war was going to happen, and they dumped gold. Okay, and then if we remember, after the peak in January, it dumped, and then it climbed back up because the war didn't happen. I guess at that stage, Trump was still on the fence. He didn't pull the trigger yet. So then, if you remember, Jesse, in February, all of a sudden, the Epstein file thing blew up. Everybody talked about the Epstein file. So I think that was the final push that pushed Trump to pull the trigger. And that's why, at the end of February, we saw like the US, did that decapitation operation on the old Iranian leadership. And by the way, they did that while they were negotiating with Iran. So that was like a sneak attack kind of thing, right? That's what we saw there. And then the second time when gold dumped, that was, I think, you know, and I wrote it on my X. That's when the gold for RMB converted, oil for RMB, and then the excess RMB converted to gold trade. That was disrupted, you see. Okay. And then gold dumped. Because in that system, you have these GCC countries continuously buying physical gold because they would have some sort of RMB surplus, right? And then all of a sudden the war started and that got disrupted. But I pointed out also at the same time, the petrodollar system got disrupted. So yeah, like a part of it was probably RMB for oil, and then they took the RMB and bought gold. But more of it was selling the oil in US dollars and then recycling that US dollar surplus into US treasuries. So now, like I said, the output of that oil out of the Persian Gulf or the Middle East is at 30% of what it used to be. One would imagine that their purchasing power, I'm talking about the GCC countries, of US treasuries is probably around, I guess, 30% of what it used to be.
The sponsor of today's episode is ARC Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. I want to pull on a thread there about the oil for RMB trade and how significant you see this as being, because obviously the petrodollar is what has allowed the US to retain hegemony over the world. And it feels like part of the reason for this war in Iran is to stop a shift to a multipolar world, and the US really wants to keep dominance as the sole global superpower. How significant is this for the US dollar? Because, we hear all sorts of things out there from, the US dollar is extremely strong. It's not going anywhere anytime soon. We, of course, have the dollar milkshake theory, which I know you're adamantly opposed to on a regular basis with your posts on X. And then, of course, we have people on the other extreme, if we go as far as possible in that direction, saying the dollar's actually on its last legs, it's ready to die anytime soon, and we're entering kind of a new world order where the dollar is no longer going to act as the reserve currency. Where are you on that spectrum, and how significant of a development is this oil for RMB trade impacting the whole picture?
So let me ask you a question. You're Saudi Arabia, you are the UAE, Dubai, right? That's it. And you have been paying the U.S. government this tax base. Essentially, that's what it is. Like the petrodollar tax. Let's call it that, right? Over the last 40 years. And the deal is that if ever you get attacked, Uncle Sam is going to step in and save you.
Yes.
Nothing is going to happen to your oil refineries, your infrastructure, your oil tankers, etc. Right? That's the promise. Like that's the petrodollar deal promise. All the way back during the Nixon era. What happened in the last month or the last couple of weeks? That promise has been broken, Jesse. Right?
Yeah.
I mean, none of that happened. They couldn't protect their allies. So, like, if you are one of these countries, what's your incentive to do this all over again and then get betrayed by the US government all over again? And as a matter of fact, like, you know what's crazy? The craziest thing is, like, during the heat of these Iranian missile barrages, apparently the US military moved missile defense to Israel. from these GCC countries. I mean, if you're one of these GCC countries, what would you think? You pay you're the Uncle Sam's biggest financial contributor, but then when push comes to shove, they move all the defenses or a lot of the defenses that are supposed to be for you to Israel.
Yeah, then in that case, I certainly see your point. I want to circle back to silver for a moment, and I also want to discuss the possibility of how bad you think this could get from a global recession type of perspective. Because if we do indeed see a slowdown around the world, as you've already pointed out, that's going to mean less demand for silver, considering how much it's used in industry. So first of all, do you see this potentially resulting in a very serious global recession? And if so, what could that do to the silver market?
Okay, listen. So, as you know, Jesse, I read a lot, like from other experts, right? Because me, you, we might know a bit, but we don't know everything. We have to get as much information as possible from people who are at ground zero, who are right there in the Middle East. And apparently, what what I see now is that the experts are saying that the U.S. LNG industry, that's the natural gas industry, okay, liquid natural gas, they can fill the gap that the Middle Eastern guys are, leaving behind because, like, again, their facilities are getting missiled by Iran, destroyed, right? So there's a production gap there. Apparently, the Americans can double their production within 2 years. So what does that tell you? That tells you that the market is evolving, right?
Yeah.
It's not like the initial kind of assessment that a lot of people are pumping out. I think what's going to happen is as this thing get drawn out over time, like let's say like the U.S. military managed to land at the southern part of Iran. I think that's what's happening, right? They're sending like the airborne regiment, expedition, marine forces to the area of the Strait of Hormuz, okay, southern part of Iran. So if they manage to land, let's say, right, without serious setback, or even if they have a setback, right, but they manage to get a foothold, and this thing get drawn out, I just see the market adjusting itself. Do you see what I'm saying? Russia um, increasing production, the U.S. increasing production on certain things that they have capacity to, like natural gas, and that's why I see.
Yeah, that's interesting because obviously fear sells, and we're seeing a lot of reports out there on social media that the world is now changing forever. We're entering an era where, I've heard people talk about you'll no longer be able to get avocados at the grocery store. We're entering a new world where, supplies are going to be limited. There's going to be food shortages, all of this. And in many cases, that could be true, particularly in Middle Eastern countries. But I think it's important to take a step back and realize all of the different insane events that have happened throughout human history, and the market has found a way to adapt. Now things might get expensive in the short term, obviously, and perhaps in price inflation for food, many things will go up, which is tough because there's already a squeeze on people's cost of living. But at the end of the day, hopefully we will see things stabilize. I want to get your thoughts on gold and silver mining stocks as well, because they took a hit along with the metals. The fundamentals all still seem to be there for the sector. I wonder if you see this as a buying opportunity. Would you be sitting on the sidelines waiting for perhaps even a further correction? How are you viewing the gold and silver miners at present?
So gold and silver miners leveraged plays on the actual metal. And just to tell your audience, I haven't sold anything. So I still own all the physical gold, the physical silver, and all the miners that I bought years ago. So I haven't sold anything. And in terms of buying now, I always tell people if you're not sure, dollar cost average. Don't put your all your like don't blow all your ammunition in one shot. Dollar cost
Right.
average. Buy a little bit right now, right? Like because like who knows what's going to happen next week when the Marines actually land in Iran? We don't know what the market reaction is going to be. It can be violent, Jesse. I mean, potentially, gold can dip below $4,000 if an acute liquidity event happens. We don't know. So my answer, like always, dollar cost average.
So, given everything we've discussed so far outside of gold, silver, the gold and silver miners, where would you be looking to deploy capital in such an uncertain investment landscape? Now, I know you're saying dollar cost average, so perhaps in some ways it doesn't really matter as long as you understand the long-term thesis behind what you're investing in. But I'm wondering, do you think oil and gas looks good here? Would you be cautious about that given the sort of whipsaw volatility due to all these different events going on? Are there any other commodities or areas of the market that you're looking at right now that you think present an attractive value proposition?
I mean, like I said, if you know the space well and you're looking at natural gas companies in the US with domestic production that is going to ramp up, sure, why not? But be aware of the volatility and the manipulation. I mean, like I think me and you were laughing at the oil price, how it whipsawed and how it crashed recently. It just doesn't make any sense. So there's a lot of manipulation as well. You have to be aware of that when you buy these things, right? I myself, I'm in uranium, so I like that better than oil and gas because the players in the uranium space, I'm talking about the US government, they simply want uranium to go up because they want to reshore all that supply chain to the US. And uranium is not like oil, it's a what they call base power. So there's no political pressure to manipulate the price of uranium down in this juncture.
Yeah, you're preaching to the choir here. The majority of my portfolio is in uranium equities. Um, I want to also pull on that thread that you mentioned about China and their role in all of this, because it was interesting. I was watching an interview with a guy named Brian Berlitic the other day, very interesting geopolitical analyst. He said one of the main reasons for the war in Iran is actually to cut China off from energy. I think he was saying it was the main reason. Like this is really about cutting China off from affordable energy to try to stop their rise. Because according to Brian, within 5 to 10 years, there will be an irreversible trend in which China will surpass the US on all metrics and become the new global superpower, and that the neocons and the US administration is absolutely desperate to stop this from happening. Is that the picture you see as well? And how do you expect China to respond should this continue to escalate?
Well, that's a very good point, but I take it a step further, Jesse. What I see, if you look at the gold chart in the last 4 or 5 years, um, you see the price of gold accelerating, starting in 2024, 25. And that is interesting because it coincides with the information I get from China that the GCC countries, which are the Gulf Cooperative Council countries, like the Saudi Arabia, UAE, Qatar, etc. Okay, and supposedly these countries started to deal with China in terms of selling its oil to China, at least for part of it in RMB yen. Ah, so that's a step further than what the expert you just quoted said, right? Like not only China was getting reasonably cheap energy, but it's starting to chip away from the petrodollar. Okay. So recently, and then we all know that, and I wrote an article on this, that China has been buying sanctioned oil from Iran, sanctioned in quotation marks in US terms, okay, from Iran, and they paid for all that oil in RMB yen. I wrote an article on it, how the entire mechanism works and how that RMB sits at the Kwanlong Bank, the Bank of Kwanlong, which is at the Xinjiang Uyghur uh, Autonomous Region of China, which is like, the western province of China near
Yeah.
Iran. It's a Muslim bank. So anyway, so my whole point is this de-dollarization, oil for RMB has been accelerating, and then apparently in January of this year, 2026, the Saudis started to sell its oil to China, and then for 50% of that oil, they accepted RMB. So I think like when that happened in January, I think somebody knew in DC that there's a real big push to start a war in the Middle East to stop that. So I'm in agreement with the expert you quoted, but I'm taking a step further, and I think it's not only cheap oil, but like to at least slow down that de-dollarization, right, of Middle Eastern oil. And then of course, like you have and we shouldn't dismiss this. There's the Israel components. I think Israel really wanted to start a war of Iran and have that greater Israel project going, right? Kickstarted. And so if you remember, at the end of January, gold got kicked down because somebody probably knew ahead, like, a month, 2 months ahead of time that this was going to happen. So they dumped gold. And then if you also remember, in after it got dumped in at the end of January, gold climbed back up almost to its all-time high. And then, the US started attacking Iran. And then gold dropped for a second time. So the second time when gold dropped, I think that was a reaction to the disruption of the oil for RMB to physical gold trade. It all makes sense.
Yeah, I actually want to touch on Israel in just a moment and their involvement in all of this, but I also want to discuss gold and silver inventory levels, the latest data that you've been looking at when it comes to the COMEX, LBMA, Shanghai Futures Exchange. What are current inventory levels and deliveries? What picture are they painting at the moment about precious metals markets?
So China, like, let's focus on silver, right?
Yeah.
Because that's the metal that I think there's a real global dislocation or shortage, if you may, right, of the above ground 999 pure silver. So in China, the combined uh, silver at the SGE, which is the Shanghai Gold Exchange, and the SHFE, which is the Shanghai Futures Exchange, the combined physical silver there is now almost below 600 metric tons. That's significant because normally they have in excess of 2,000 to 3,000 metric tons combined. So now we're below 600. And in my calculations, if they don't get a refill soon, that's only going to last 3 months until there's zero. That's China. And then my friend PM Buck on X, he keeps track of the LBMA. So apparently we're at that level now, around 5,000 to 6,000 five to 6,000 metric tons. Okay, at the LBMA, probably even less because you can't trust what they tell us. Okay, or free
Right.
float silver at the LBMA. And the reason why he and I both say that's the danger zone is because last time when the LBMA had like around 5,000 metric tons of free float, that was in September of last year. Within 20 days, they were down to zero. Okay. If you remember, that's when silver shot up from 40 to like six to like, more than 50, right? Like, so basically, um, you know, it's quiet. Everything is kind of quiet on the surface, but there's a lot of turbulence under that quietness on the surface in the silver market.
And so if we were to look ahead in terms of the silver price, silver price predictions, obviously, the predictions in general are a mug's game in many ways, but do you think we get back to that triple digit level before the year is out?
It's possible, but like I said, in my Substack article and also on my X account, we have to get through this potential liquidity squeeze first. Okay. I mean, there might be a US dollar, another one that is upcoming. If, let's say, the US military lands in the south of Iran and run into problems, there might be another capital flight that happens in the Middle East. So we have to, I think it's prudent to wait and see what happens there before you make major decisions on precious metals.
Yeah, so interesting. And I think that over the course of our conversation today, you've really brought together the geopolitical side along with precious metals markets. It's funny because I always get people in my comments who are angry. They just stick to the metals. Stop talking about your opinion on geopolitics or the war or these things. And you've like demonstrated perhaps better than any guest in recent history on the show how intertwined all of this actually is. So I think it's important that people really consider that and take their emotions out of it. You know, which side you think is right or wrong. That's not important for the purposes of your investments. What matters is what's actually happening on the ground. And speaking of which, a topic that's going to make many people angry, Israel. How much do you think they are behind this conflict? What is their end game? And have they hijacked the U.S. administration? Because that is the popular way to look at things online these days on X. That actually it's Iran calling the shots. BB is telling Trump what to do. Interestingly, that expert I quoted earlier, Brian Berlitic, thinks that's actually U.S. propaganda, and that Israel is a vassal state to the U.S., and that the U.S. actually makes them take on the role of the scapegoat when it's actually the US who is behind all of Israel's decisions as well. And it gives them some flexibility to say, well, like Trump did recently, we didn't know they were going to bomb the gas fields in Qatar. I can't believe they did that. When actually, in reality, they're the ones giving the order to do that. How do you see all of this? Is Israel the vassal state? Is the U.S. following Israel's order? And just your overall thoughts on the topic of Israel and the war.
First of all, it's difficult to get into that topic, right now because we only got, the entire show is like 30 minutes, right? Like that in itself is probably a 2 hour topic. Okay. But like I'll try.
Yeah.
I think I don't agree with the expert. I agree with you. I think definitely the Israel lobby has a lot of power to sway the US government. I mean, come on. Just look at how many Israeli donors there are at like during US elections. How much money Donald Trump's campaign took from Israel related donors, super donors. I don't know why that person would say the positions are reversed. It's ridiculous. Okay, okay. So I think Israel. I think this whole thing is because both Israel and Trump underestimated Iran. They think it's going to be maybe slightly more difficult than Venezuela. Remember Venezuela, how they just walked in and kidnapped Maduro?
Yeah.
Like one night they just went in and took him, right? So I think they think it's going to they thought it was going to be a cakewalk like that. And now they're bogged down. So yeah, so I think Israel thought it's going to be a lot easier to subdue Iran, to potentially instigate a counter revolution within Iran and have Iran broken down to 16 pieces. Okay, never able to threaten Israel again. I put threaten in quotation marks. Okay, because that's probably in their mind. I don't know. Anyway, my whole point being that they never anticipated Iran having such effective missiles and drones that are able to penetrate their defenses. And I said on my X account, Jesse, if this continues for another 6 months, there won't be a Tel Aviv left. They will just flatten it. I'm talking about the Iranians with the missile barrages.
The last question I want to ask is related to another rumor that's circulating on X, which is energy lockdowns. People are saying this is going to be COVID 2.0. They're going to force people to stay home and not go out and consume to conserve energy. I mean, in some situations, this is already happening, I think, for actual practical reasons in places like Pakistan, Philippines, countries that rely extraordinarily heavily on those Middle Eastern energy flows to support their society. We're seeing things like 4-day work week, people being discouraged from driving, told to work from home. In Australia, interestingly, now we're starting to see some pretty extreme measures come into play. That Anthony Albanese, whoever this scumbag, their prime minister, whoever this guy is, he's now saying, you know, we're passing a law to stop price gouging in oil and gas, which of course that's just government intervention in the market as always, which usually destroys everything that it's, you know, it basically encourages the very thing that it's trying to stop. And we're hearing stories, same thing in Australia, people being encouraged to stay home, all of this sort of stuff. So that has people on edge, you know, who went, obviously all of us have gone through those lockdowns, and the fears of it coming back again. Do you think those fears are unfounded? Do you think certain governments could use this situation to take advantage and gain greater control over their citizens? What's your view there?
I think you answer your own question. I think it depends on the on where you are geographically. If you're in the US, US is a net energy exporter. So why the heck would the US lock down anything? The net energy exporter is not going to happen. Like that, the mega guys have been telling me this every day, nonstop, since the war started. So people should stop being bipolar, right? Stop telling me the US is a net energy exporter every day, every second, and then turn around and tell me they're going to lock down everything. Like the two things don't coexist. Okay, so I don't think it's going to be a problem in the US, and possibly not a huge problem in China because China actually has 30% of China's energy it domestically generates. Okay, so and then China also up this import of energy from Russia 40% last year. So this is new, like fresh off the press news that just came out recently. Like timely too, right? Like they upped it 40% last year. So I think China should be okay. It's like you're right, it's the small countries like Philippines and countries like Australia that just have no clue of what's going on. So, Australia, but again, Australia can get LNG from the US. Like the Americans will be happy to sell LNG to the Aussies for, I don't know, like 30% premium, 50% premium. It's a question of price. That's all. I think at the end of the day, if you have the money, there will be a seller. It's just how much you're willing to pay for it. Agreed?
Yeah, and I think there's a lot of stupidity that's gone on in countries like Australia that have massive reserves of natural gas, oil, every single commodity you could think of, coal. I mean, they should be building coal plants in Australia. Really, that's what China's doing. They're building all sorts of energy infrastructure
Exactly.
because you need to be able to be flexible for situations like this. And a lot of these countries, Canada now telling their oil sands companies, oh, forget maintenance, don't do care and maintenance, just keep pumping oil and gas out of the ground, like which is kind of actually a safety concern. You're not supposed to do that because that government has put all these restrictions on building new oil and gas facilities, bringing new reserves online, pipelines, all this sort of stuff. And now they're scrambling to kind of fix the problem. So that's completely insane. Well, Eric, this has been a fantastic conversation as always. Tell us about your Substack and anywhere else you want to direct people online.
So yeah, my Substack's handle is at King Kong 9888. It's the same with my X handle. It's at King Kong 9888. And if you go on my Substack on my X, you can find all my writing and I share my thoughts very frequently, daily, multiple times within the day.
Yeah, one of the greatest X accounts out there, in my opinion, if you're interested in precious metals. And I will go ahead and link both your X and your Substack in the description below so people can check that out. Eric, once again, thank you so much for coming on the show.
Thank you, Jesse.
Thank you for joining us today. This episode is brought to you by ARC, Silver, Gold, Osmium. They have some great prices on gold and silver bullion products. They are on your screen right now. These are subject to change and well supplies last. So reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you, and represent sound money in style with the exclusive Stack Silver, not Fiat Commodity Culture t-shirt, available in the shop using the link in the description below, and I will see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.